Grain market all higher all the way across the board here today, being led by wheat. Thank you very much for joining us for the Market Day Report. I'm John Jenkinson. We'll start here in the corn market. September is up 4 3/4 cents right now at 366 3/4. December new crop corn is up a complete nickel at 381 1/4. And you go all the way out to July, it's up 5 at 402 3/4. So we've got the July contract probing above $4. In fact, the low in that contract is $3.99, just a penny underneath, and then we've got as high as $4.04. If we back up and show the 2019 May contract, it's right on the edge of $4. The high of that contract, $3.99 1/4. As far as the soybean market is concerned, well, this is where we saw some strength earlier today. Then it backed off about 30 to 45 minutes ago, and now pushing higher again. August soybeans up 5 1/2 at 876. September soybeans up 6 1/4, and new crop November soybeans up 6 pennies at 891 1/4. However, that contract's been as high as 896 1/2. So let's go on over and find out what's going on in the wheat market. September Chicago wheat up 18 at 548 1/2. Kansas City September wheat is up 16 at 548 1/2. And the September Minneapolis wheat up 14 1/2 at 607. New crop December cotton is up 115 at 89.49. At the edge of the trading floor in Chicago, standing by to visit with us is Scott Gecas. He is with Longleaf Trading, and he joins us now to talk about these markets. Scott, this wheat market certainly is setting the pace here in the grain complex. Why is that?
Yeah, with the drought across Europe, you're seeing global production just, keep decreasing. So, you're still seeing that big lift in wheat. It's driving pretty much all the grains higher. That wheat contract we're watching and keeping a very close eye on that 554 level. That's a contract high for that market.
Also, Scott, we were taking a look here at Tim Ross, our meteorologist, weather forecast map here a little bit ago. Looks like some heat could be returning to parts of the Corn Belt.
Yeah, and that's definitely one of the factors that we're watching here moving forward. The big key factor in the corn market right now, what we're watching is that E5 or that E15 blend. That waiver is expected to come out fairly soon. It's still running strong demand for that U.S. ethanol. Mexico's buying corn from Argentina. I think that's a play on NAFTA. They're supposed to get some NAFTA talks here soon by the end of August. Hopefully they can get a deal, and if that does come through, you're going to see a big pop in some of those markets.
Let me ask you a question about this corn market then while we're on that topic. If you look at a December corn chart and look at some of these levels where we are at right now and in relation to what you were just talking about, where do you see support and resistance both?
In a corn market right now, we're looking at that 380 level as support. So if we can hold that, we got a little bit room to run, right roughly around 410, 415 level.
Okay. What about soybeans then? Same thing over here. Is there starting to be the signs of maybe some firmness come back to this market also?
Yeah, I think that with the NAFTA talks, and that could come out at any time. They're expected to come out late August, but if there is a deal surprise, deal worked out with NAFTA, you're going to see all these markets move dramatically to the upside. We've seen some of that short covering on Friday, just due to the $12 billion aid package that Trump came out with. But if in the soybean market, we're looking at 900 as a major resistance level.
All right, Scott Gecas here with us. When we come back, we're going to be talking about the livestock trade, and we hope that you'll be sure and join us right here, straight ahead on the Market Day Report. What started out to be a stronger day for the cattle market kind of waned about a little over an hour and a half ago. The latest numbers here on the live cattle and the feeder cattle show us where we are in negative territory. August live cattle down 14 at 108.48. October down 67, 109.80, and December down 70. We've got August feeder cattle down 80 cents at 151.50. September also down 80. October's down $1.12 at 151.63. August hogs down 30 at 63.35, but October's actually to the higher side, 4 cents higher at 50.92. But December hogs are down 20 at 46.25. At the edge of the trading floor and standing by here with us again is Scott Gecas with Longleaf Trading. First of all, what's your thoughts over here on this protein complex? We've seen quite a bit of weakness all the way across the board over this last hour.
Yeah, I mean, the protein complex just across the board, they're dealing with huge supply concerns. You know, in the cattle market, the fourth quarter production is expected to rise by 4.3%. That's usually when it drops off. So an increase of production is not necessarily a good thing for that market. It's an increase of about 115 pounds to the market. You know, the slaughter rate continues to rise, you know, week versus week, year versus year. But we're still holding on to that 110 level. We're going to keep a very close eye on that 110 level.
I want to go, while we're on this topic, I want to go and talk about the October hog chart. And the reason I bring up October is because that seems to be the one contract that more people are talking about that gives us a little bit more direction here. If you take a look at this and compare it to what has been going on, even all the way up to last Friday, this is setting some things up to kind of give a telltale sign of where the hog market could end up.
Yeah, I think that October is pricing in something positive coming out of NAFTA. But, you know, that break of 65, you know, it sparked a lot of fresh selling, new positions going short, you know, huge supply concerns. You know, the production is increasing. It's the second largest production rate in 21 years. That's very significant. So if we can't get the hogs exported out and we can't get some of those other countries to import, you know, they're going to run into some big problems here. You know, in the short term, that 65 level was a huge technical breakdown. You know, we're looking to test maybe 60 even.
All right, Scott, thank you very much. Scott Gecas, Longleaf Trading at the edge of the trading floor.